Good afternoon, ladies and gentlemen. Welcome to the Ramonepreston Show. We are live right here in his house on this beautiful Thursday, right here in the Buckhead community of Atlanta. Please do me a favor. If you're coming on, hit that like button, hit that share button, tag Lolly Dolly everybody, and let them know. Your boy, Ramonepreston, my squad, and the Ramonepreston Show. We're live today right here on the Ramonepreston Show. Good afternoon, ladies and gentlemen. Today we're going to be doing a Q&A, live Q&A. I've got a lot of questions that so many of you have been asking, and we do our best to take those questions and circle back around at least once or twice a week, depending on the amount of questions, and just answer those questions to give you some information and insight into the things that might be important to you. So please do me a favor, hit the like button, hit the share button, tag somebody, let them know that the Ramonepreston Show is live. And today is Thursday, September the 29th, 2022. And we are right here live in the beautiful Buckhead community of Atlanta. Good afternoon, ladies and gentlemen. Welcome to the Ramonepreston Show. If you don't know, you better know. My name is Ramonepreston. I'm the host of the Ramonepreston Show. And every Monday through Friday, even sometimes on the weekends, I show up here on this show live to give you information, to give you the game, to help you do what needs to be done so that you can start, structure, and scale your business and your finances. So if you know you're an entrepreneur, if you know you're supposed to be a successful business owner, if you know that you're supposed to have that money right and that financial game needs to be correct, well, guess what? This is the show that I share information with you that can help you understand the principles and the practices behind it. I give a lot of information out. I share a lot of strategies and solutions. And today we're going to just do a live Q&A. Again, there are a lot of questions that I get, and I do my best to answer those questions. And while we're live on the show, if you have a question that you want answered about holding companies, about tax strategies, about financial literacy, about investing, whatever the question is, feel free to drop the question in the comments. And me and my team, we're going to do the best that we possibly can to get to that question and answer that question. So again, welcome to the Ramonepreston Show. Please also put in the comments what city you're watching me from. I would love to know what city you're watching your boy from. Put in the comments what city you're watching me from. This is our live Q&A. Live Q&A. I get questions all the time. And a lot of the questions that I get from you, the viewers, these are questions that relate to what you might be thinking about business, or what you might be thinking about money, or what you might be struggling with and dealing with, and you just need to get some insight on it. So if you have any questions that you would like for me to answer during the show today, live, drop the question in the comments, and I'll be more than happy to answer your question. One of the common questions that I've gotten this week, I've probably gotten this question about 2 or 3 times, is what's the difference between a trust and a holding company? Or is there any difference between a trust and a holding company? And the answer to that is, number one, yes, there is a difference between a trust and a holding company. Most of the times when you have a trust, you either already have a holding company set up and other operating companies set up, and you start a trust because you want your trust to own your holding company. But a trust is not necessarily a operating or business or a holding company that's set up as a business. Okay, it's just documents that you're using to hold assets and make sure that they're protected, especially from probate court or any of the things that you might have to deal with, especially when the person who creates the trust dies. But a holding company is different because it is a LLC or some type of C Corp or any other corporation. So the holding company is basically a business that you're using to hold assets, to hold ownership interests, even though a trust will own assets and ownership interests, but a trust is not operating as a business. A trust is not doing what a typical LLC is doing, which, by the way, if you are thinking about a trust, but you are a business owner and you really have not structured your business the right way using the holding company, I would recommend that you do that first. It's not that you don't need a trust or that a trust can't benefit you, but you need to make sure that your business is structured correctly, at least first, especially if you're out there doing business, which means if you got a regular business out there making money and you don't have a holding company, and the only thing you got in your mind is, oh, I want to go ahead and start a trust. Well, why don't you go through the process leading up to the trust by structuring your holding company? And again, if you talk to financial advisors or, you know, the experts in those areas of estate planning and trust, maybe they'll tell you something different. I've heard them say the same thing. This is where I get a lot of my information from. And again, when I speak on certain things, I don't necessarily claim to be the person who knows everything about that area, but I'm giving you information that I've gathered. I'm giving you information that I've gotten from people who are actually doing it, whether these are tax and estate planners, whether these are strategists in taxes or businesses, and I'm giving that information to you. Another question that is very, very common that I get is like, why should you even start a holding company? Why don't you just use a regular LLC or a regular operating company? Well, there's a lot of different reasons, and I can't even give you all the reasons, but let me just give you a few. Number one, if you have an operating business that's out in the marketplace and it's making money, it's selling products and services, and that's your only business, most likely all of your valuable assets, whether it's the trademarks, the intellectual property, certain processes that you have that are proprietary to you, whether it's any other assets like business income, if all those things are just tied into one business, if anything ever happens to that business outside of maybe you have an insurance, then everything is subject to what happens because it's only one business. One of the biggest bonuses and benefits of having a holding company is to separate your operating business from the holding company. You want to separate those two. So now, for example, if I own a holding company and I have a certain business entity that I'm using to sell products and services, well, that business entity may not really own anything. It may just be used to run that business activity through. So it may not necessarily own the equipment it's using. It may not own the piece of real estate it's working through. It may not own the process that it's actually utilizing to sell the product and service or whatever it is, because all of those different things could be separated and actually owned by the holding company. And so that's one of the most powerful benefits of having a holding company, which is separatism. You can separate all these different assets. Like, this is what a lot of wealthy people and a lot of major corporations do. They have holding companies and they separate all their assets from their operating companies. Even if they have to lease certain things to those operating companies, they would prefer to do a lease agreement rather than having that operating company own those assets. So to the question that I've gotten quite a few times, even just within the last week, you know, what's the benefit of having a holding company? That's one of the main benefits. And there are many other benefits, but that's one of the main benefits. Shout out to Desmond on YouTube. Thank you from Bahamas. Mr. J.K. Forbes, the question I see, he says, how many different bank accounts are needed to compartmentalize your business. For example, an account for taxes, an account for overhead to run the business, an account for payroll. I'm gonna be honest with you. I know some people who use that concept. I don't really use that concept. I know people who do use that concept. They separate everything for taxes. They have separate bank accounts. I honestly, I don't do that. I use one bank account. And for me, it's easier because I guess I can say I'm a little more disciplined, financially. So I don't necessarily need to separate everything because I'm already so in tune with the money that comes through my business account, my main account. So of course, if you have separate entities, you want all of them to have separate businesses. But if I've got one business and I'm probably not going to have 4 or 5 different accounts for that business. One to put money for taxes, one to put money for overhead, one to put money for payroll. I don't do that. I know some people who do that. I don't do it. I think it's, personally, it's my opinion. I think it's a waste of time. And I think it's more confusing when you do that. Where if you have the one account, you just got to get disciplined and get better at running your financial affairs, probably on your QuickBooks or your financial system, so that whatever is in the bank account, you know what's what based on your financial acumen, your ability to know the accounting side of your business through QuickBooks. So I don't use my bank accounts to do what I want to do in my QuickBooks. I guess that's an easier way for me to put it. I will use my QuickBooks. So I got a business. I got one business here, and then I got one bank account. This is my bank account. So of course, in this bank account, I've got payroll. In this bank account, I got tax liabilities. But again, for me, I'm not even going to be putting this money for taxes over into another account, because most likely I'm going to be repurposing that money or trying to minimize that tax liability. So I'm not even going to need that account. So it really doesn't, it doesn't work for me. Payroll, then I'm going to have overhead. So all of these different things that you're doing under this one bank account, you can either have 3 bank accounts, you're gonna have 1 bank account, or you're gonna have 3 right here, right? I know some people who have these, and they also have another account just for what they're taking for themselves. But I don't need that, because I'm gonna have QuickBooks over here, and I'm gonna use my QuickBooks account to make sure that I understand everything that came in, everything that went out, and what would be allocated to each of these things, and what's left, what's my free cash flow, how much real cash that was collected. All of that is really accounting. So I'm not gonna, just to simplify this answer, I don't use, I'm gonna simplify this answer by saying it this way. I'm not gonna use separate bank accounts to work my accounting. I'm not gonna do that. I'm gonna just use one bank account, and I'm gonna work my accounting through QuickBooks. That's what I'm gonna do. I'm gonna do it that way. So I don't utilize that way. Now, someone also asked me a question on creative tax strategies, but I appreciate the question. Thank you, JK. If you have any questions, those of you that are coming on live, please drop the question in the comments. I'd be more than happy to answer whatever the questions are that you might have. So I had a question on tax strategies as well. I'm trying to find where that question was, but there was a question someone asked me about creative tax strategies. They wanted to know what are some things that they could do. What are some things that they could do to implement creative tax strategies? Well, here's the thing. Number one, if you're implementing creative tax strategies, what you're saying is, I'm looking for ways, I'm gonna simplify this. If you're looking for ways to implement creative tax strategies, you wanna know how to implement these types of strategies. What you're really saying is, you want to find ways to have more write-offs and more tax deductions in your business. This is what you're basically saying, because if you need creative tax strategies, that means you're making enough money that you want to minimize your tax liability. And if you're making enough money that you want to minimize your tax liability, then what you need to do is figure out creative ways to have more write-offs, more tax deductions or business deductions, right? Well, again, all of this is going to be an accounting issue, because if you got money coming into your business, this is income, and then you have operational expenses, you have payroll, right? You're going to only be liable to pay taxes on the money that's left, the income, the revenue that's left after your expenses, after the things that you have to pay are paid. So for example, if you bring in $50K and you have payroll, you have marketing, you have overhead, you have all these expenses, whatever the expenses are, just the typical business expenses. And those expenses are, let's just say they're 30 grand, okay? They're 30K. Then that means you got 20K left. So I have a whole course on creative tax strategies to show you how you can make these mathematical equations work, and then circle back around and see, what did I spend money on that I didn't use as a business deduction? Because a lot of times you miss things, like I've done it. I remember one year I did my taxes, and I misplaced like probably $15,000 worth of expenses, maybe 12. It might have been 12. I missed them, but in this one year I didn't go back and double check. This is why I always tell people to go back and double check, because one year I didn't go back and double check, but because I was already showing a loss for that calendar year, it really didn't hurt me, but it was just maybe about $12,000 more of a loss I would have had that year that I wasn't able to show because I didn't circle back around and double check. But I'm bringing that up because if you had 50K of income and you had 30K of expenses and you have 20K left, just basically speaking, you would be liable to pay taxes on that 20K if you don't have no more expenses, if you don't have no more deductions, if you don't have no more write-offs. So when you just do the basic math on your income and expenses through your business, and you've done the right math a few times to make sure you haven't missed anything, it's easier for you to see, okay, I got 20 grand. Now out of this 20 grand, if I paid taxes on this money, how much would my tax bill be? This is where having a CPA or somebody that you have a relationship with, you can reach out to every quarter. Because if you do this every month or every quarter, at least every quarter, it makes it easier for you to have a conversation with your CPA and say, okay, this is Q3. We're at the end of Q3. I made 50 grand. I went through all of my income and expenses for the third quarter, and I've spent 30. And so I'm going to be liable for 20. If I paid my taxes now, what would my tax bill be? Okay, they may say, okay, well, your tax bill might be, let's say, $4,000. All right. Now you want to see, okay, how much of that $20,000 do you still have left? Do you have any of that left? So this is why I teach these principles, and I have a whole course on this to show you how you have to get good at accounting when you running a business, especially if you're a small business owner, you're a solopreneur. You got to get good enough at accounting for you to be able to track all your income, track all your expenses, track the free cash flow that's left, track what the potential tax liability is, and to see how you can lower that potential tax liability, especially if you have free cash flow. Because this is going to be the game. I always tell people this: if you running a business, if you running a business and you start making money, the next problem you gonna have running that business is going to be a tax problem. So again, if you have any questions, drop the questions in the comments. I'll be more than happy to answer the questions that you may have. So somebody, I think somebody was being a little shady with me, you know, because I posted something and they asked me a question about, well, you know, like, you always, you know, you're talking about wealthy people and getting wealthy, and you got a business and financial wealth building system. Somebody pretty much responded. I don't know if it was a question, but I just felt like I should respond to what their comment was. And it was about, you know, if you know what wealthy people do, like, why don't you just tell us? Which I do tell people what wealthy people do. And it's not a secret. Okay, so I'm gonna just share with you these few things that wealthy people do, and this is an idea of how they get wealthy and how they stay wealthy. So I want you to write this down. So this is kind of like an answer. It really wasn't a question that somebody asked. I think somebody was just being, you know, they were trying to be, what do you call it? They were just trying to, you know, maybe troll me or whatever. They were just, you know, being critical. So I thought I would just speak to that. Okay, so wealthy people. I want you to write these things down. Come on, baby. Why are you tripping on me? Wealthy people. Here are the things that they do, and they do well. Number one, wealthy people know how to make money. I want you to write this down. So somebody responded to one of my posts and they was like, hey, you know, you always talking about what wealthy people do, and you got a wealth building system and blah, 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 blah. So, you know, if you know so much, tell us how to do what wealthy people do. Well, I'm finna tell you. Since you want to be a know-it-all, maybe they're not watching, but if they ever come back and rewatch this video, this is going to be my response to them. Wealthy people know how to make money. What do you mean wealthy people know how to make money? Well, most people who end up wealthy, I'm not talking about the people who got old money and it was just given to them from some inheritance. I'm talking about people who went out there, created wealth because they wanted to be wealthy and they figured out a way to do it. Well, one of the first things that they had to figure out is how to make money. So this has to do with sales. This has to do with marketing. And it also has to do with products and services. I'll just put P and S over here, products and services. So in order for you to make money, you got to learn how to sell. Because how else are you going to make money? Making money is about exchanging a product and a service or an idea for money. And in order for you to make money, a lot of times, especially in this digital world, you got to know how to market. You got to know how to get in front of people. You know how to get attention. You got to know how to promote. You got to know how to get awareness. And once you get that attention and awareness and promotion, and it starts getting people to pay attention to you, you got to know how to sell them products and services that are actually good enough to be sold. So this is what wealthy people know how to do well. They know how to make money. Wealthy people also know how to, and whether you want to accept it or not, they know how to minimize taxes. So again, when wealthy people start making money, when they start doing number one, making money, they automatically start working on number two, minimizing taxes. This is what a lot of people who are not wealthy don't do. So if you're not wealthy minded and you don't understand the things that wealthy people know, even when you get good at making money, if you don't know how to minimize your taxes, guess what's going to happen? You're going to lose all the money you make. That's just as simple as that. I hope I'm making sense to you. And this is just like a free lesson because I want to respond to somebody who was trying to troll me and be sarcastic. That's the word I was looking for earlier. They were really being sarcastic about, well, if you know what you know and you act like you the millionaire mogul and you got all this game and information you sharing with people, why don't you share the wealth? Well, I'm sharing the wealth. Here's what it is. You got to know how to make money. Because you ain't going to get rich, you ain't going to become a millionaire, you ain't going to be financially free, you ain't going to get wealthy if you don't figure out how to make money. And how are you going to learn how to make money? Learning how to make money means I got to learn how to sell. I got to learn how to market. I got to learn how to take products and services that have value and exchange them for money. I got to figure out how to do that, okay? Number two, the wealthy, they know how to minimize their taxes, all right? Number three, the wealthy know how to manage their spending. They know how to manage their spending. So what that means is, for a season, a wealthy person may live on less than what they make. They may live way beneath their means until they're in a financial position to spend money on liabilities. So when you know how to manage your spending, meaning that you ain't going to keep putting your money out, spending it on liabilities, you're going to put your money out and spend it on assets. That's one of the things that me and my wife have always done, and we still do it today. And if you were to talk to my personal assistant and my team, they'll tell you just within the last couple weeks, I've been telling them coming to the end of the year, I'm trying to figure out more ways to invest more money into my business. Because I don't mind taking all my free money and put it in my business. I don't mind doing that, especially when I know I'm putting it somewhere that it's going to produce a result and a return at some point. So managing your spending means that you are not spending all your money on liabilities. Now you may say, well, I ain't got no money to manage, bruh. How am I manage money and I ain't got none? It's because you don't need to be focusing on managing money. You need to be focused on making money. Does that make sense? So if you're saying, well, I ain't got no money to manage, it's because you ain't making money. You got to make money. And then you got to learn how to minimize your taxes on the money you make. And then you got to manage the money and the spending that you're doing with the money that you're making and saving through minimizing taxes. And number four, wealthy people know how to maximize investing. So when you learn how to maximize your investing, what you start doing is you start taking that free money after expenses and you start redistributing that free money into things that can make your business bigger to make you more money, and things that can convert that earned or active income into passive income. That's what you have to do. So this is why wealthy people are wealthy. They make money, they know how to do it well, they minimize taxes, they know how to do that well, they manage spending very well, and they maximize investing. And sometimes maximizing investing is not buying a piece of real estate or like just spending money just to have business deductions to minimize your taxes. Sometimes maximizing investing is investing in yourself, being able to put money back into you so that you can get good. Like one of the biggest and best investments that I make all the time is I invest in myself. I invest in my education. I invest in my training. I invest in getting in the right rooms. I invest in getting around the right people. I invest in growing as a person so that I can be able to make more money and do the things that wealthy people do. So that's my response to someone who was being a little sarcastic about me always talking about wealthy people. So if you have any questions, feel free to drop your questions in the comments. I'm always available to answer any questions that I can. Mr. Forbes, I appreciate you as well. He says, thank you, Mr. Preston. Your programs and mentorship are changing my business, which contributes to my legacy. Man, I appreciate you, JK. Thank you for being a part of our mentorship program. Thank you for always showing up, asking the right questions, learning and growing and utilizing it. You know, you're one of those people that's a part of our business program and our community that takes the information and you implement it. And that's the biggest thank you that I can get, even though I appreciate the thank you as well. So today I wanted to just answer a few questions during this live show, because when we get a lot of questions on a regular basis, I don't always have a chance to circle back around either during the live and answer the question. So I wanted to make sure that I did that today. Let me see, I had a couple other questions that I wanted to answer as well. So let's make sure that I cover everything. We had another question. What's your thoughts on successfully running a business and being penalized for it via taxes? So here are my thoughts on that. I don't have a problem with you running a successful business. That's what the question is. Making money in your successful business and being penalized for taxes, if that's what you want to do. If you want to run a business, make a lot of money in your business, and just pay a lot of taxes in your business, I don't have a problem with that if that's what you want to do. Now, there are some business owners that do it for different reasons, because here's one of the downsides to not paying a lot of taxes in your business, or even from getting a salary from your business and paying taxes. One of the downsides to it is when you want to get a loan, when you want to buy a house, when you want to do certain things like that, your tax returns are not going to show it. Your tax returns are going to show a loss. So that's one of the things that I've always had to deal with, because like almost all the years that I run my business, I'm almost always showing a loss or very low on my taxes. Now, I may have to pay a little bit of taxes on my personal income tax just because I don't have as many business deductions as my business does. So I have business income and then I have personal income. And so sometimes I have to pay a little bit of taxes on my personal income. But I try to be heavy on my expenses and my business deductions and write-offs for my business, because I just take all the money that I get coming in my business and I try to just put it right back into my business. I try to reinvest it all, literally. Like if I got $10,000 that come in today in my business, I'm trying to figure out how can I, set a little bit aside, but then I want to invest as much as I can to I want my business to grow. I want my business to get where it's supposed to get. So on one hand, running a successful business, making money in that business, and paying taxes, sometimes it's a part of a strategy. When you want to be able to walk into a bank and get approved for a loan for a certain amount, and you need to show tax returns that you have been profitable every year. On the other hand, if you don't care about that, all you care about is just getting new money and putting all that free money back into your business, you might be showing up at a loss, or you may show very little profits. It's going to affect how you get a loan. It's going to affect your credibility with banks, because you can't show, like a debt ratio. Your debt to income ratio is going to be too high, which means you have a lot of debt or you have a lot of expenses, and your income is being swallowed up by all of your debt and all your expenses. So it's going to affect your banking credibility. But if you don't care about that, like for years, I didn't care about that. So I'm like, hey, I'm putting all my money in my business. I'm spending all my money. I'm trying to build my business. I'm trying to get somewhere. And if that means I don't take a big salary and pay a lot of taxes because I don't want to, I don't want that, then I just got to do what I got to do. So hopefully this has helped you for today. Hopefully I answered a few questions that resonated with you. And if you have any other questions, please feel free to reach out to me. You can actually text the word millionaire at any point, and I'll be more than happy to answer any questions that you have. Text Millionaire to 404-478-7213. And I also want to say, and I'll probably be talking about this next week a little bit, I also want to say, if you are already in business, or if you are a 1099, an independent contractor, and you are trying to figure out how to reconcile your income and expenses. Basically, you want to make sure you end this year knowing what your tax bill is going to be, or having an idea of what you need to be prepared for next year when you do your taxes. Don't wait until next year to do that. Okay? Don't wait until next year to do that. You need to do it now. I have an entire course to show you some things that you can do now to be better prepared next year when you do your taxes. All right? We have a course entitled Creative Tax Strategies. So we share with you a lot of creative business deductions and write-offs. We show you how to utilize your QuickBooks accounting so efficiently that you're able to track income, expenses, you're able to forecast. I do a lot of teaching on that because I want entrepreneurs and small business owners to be more sophisticated in that area. Because if you're just making money and you ain't tracking nothing, and then you go to the tax person next year and you like, man, how do I owe $10,000? Well, this is because of the money you made, and you ain't got write-offs, you ain't got business deductions, and you didn't track it throughout the year. You don't want to wait the next year to do that. The last quarter of this year, you want to figure it out. So you want access to that information and need some assistance with that. Make sure you text the word millionaire to 404-478-7213, and I'll be more than happy to share that information with you, give you access to our program, and to help you get better prepared for your taxes in 2023. Thank you all for joining the show today for our live Q&A. Again, if you have any other questions, drop them in the comments or text Millionaire to 404-478-7213, and we'll reach back out to you and talk to you for a few minutes over the phone to see what we can do to help you with whatever it is that you are dealing with. Otherwise, I'll see you tomorrow right here, same place, same time, 12 o'clock noon on the Ramon